Good morning and welcome to the Tissue REGENIX Group PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Daniel Lee, CEO. Good morning to you, sir.
Good morning, and good morning to everybody who has joined us on this webinar. Thank you for spending some time with us. David Cock and I will provide you an update on Tissue REGENIX as we just released our 2023 results. So we'll spend the next 30 minutes updating you on the company, our activities, as well as our plans. We'll have time for questions at the end. So the standard disclaimer slide, which I encourage all of you to review. A little bit of an introduction about myself and David. I'm Daniel Lee. I'm the Chief Executive Officer for Tissue REGENIX. I was appointed CEO in November of 2020. But prior to that, I joined the Tissue REGENIX Group as the President of U.S. Operations for the Cellrite Division. The Cellrite Division of Tissue REGENIX was acquired in 2017. I came to Tissue REGENIX with over 30 years of experience in healthcare, specifically more in medical devices, as well as biologics. And by biologics, I mean cell and tissue-based products, not necessarily drugs. I worked in startups as well as to established companies. For me, the reason I joined Tissue REGENIX was Tissue REGENIX has a global opportunity to provide tissue-based products for regenerative medicine, utilizing human as well as xenograft tissue. And this is a very unique thing that Tissue REGENIX has, which many other companies don't. And so it's particularly attractive for me to help establish and grow this business. David?
Hey, thank you, Danny, and good morning. Thank you all for joining us on this IMC platform. David Cock, I'm the Chief Financial Officer of Tissue REGENIX. I joined the group in January of 2021, about 3 years ago. Before that, I have about 30 years of experience in the medical device space. I started, ran, and then ultimately sold a medical device contract manufacturing company. And before that, I started my career on Wall Street, first in investment banking at Salomon Brothers, and then in corporate finance at GE Capital. 3 years ago, when I was doing my due diligence before I took this position, there were a couple of things that really swayed me to come on board. And one of which was the strength of our strategic partners. One of the strategic partners that we can publicly disclose and we've spoken about before is Arthrex. Arthrex is a multi-billion-dollar sports medicine company. They can and they do choose to work with any tissue processor that they would like to support their instrument business. And for their premium demineralized bone matrix products, they choose Cellrite Technologies in our BioRent segment. That was very compelling that a big company like that chose a much smaller company in San Antonio to work with. And the second thing that drew me to the group was the chance to work with Danny again. Danny is the absolute right person to be leading this company. And I think as we get into these set of results, and if you look back over the last 3 years, it's a pretty compelling record of success with our 4S strategy. And I think that was good luck on my part, partnering with Danny again. So excited to talk to you all in more detail today about our financial results.
Okay. Great. Okay. Thank you, Alejandro. Okay. So little bit about the company for those who are new to Tissue REGENIX. We are a global healthcare organization focused on the area of regenerative medicine. Now, regenerative medicine is a specific discipline where you're trying to regrow, repair, replace cells, organs, as well as tissue, using the body's innate ability to heal itself. Tissue Regenics has developed scaffold products using two core technology platforms. Both of these platforms share the objective of providing safe and sterile tissue, but also tissue that where the processing preserves the inherent biologic, biochemical, or biomechanical properties of the tissue through a gentle processing methodology. Our manufacturing capabilities are scattered around the world. In the United States, we're predominantly in San Antonio, Texas. In the United Kingdom, we have a facility up in Leeds which produces our xenograft tissue products, and then we have a joint venture, Germany, which produces our corneal products. Our product portfolio is quite extensive, and it covers bone, amniotic tissue, dermis, as well as xenograft tendon products. So these different tissue platforms allow us to have products in diverse surgical markets, where they're spine, sports medicine, dentistry, ophthalmology, urogynecology. We have significant strategic partnerships. As David mentioned, we have Arthrex as one of our partners on the sports medicine side, but we have a number of others. And we also have distributors who distribute our products. And then the company, of course, is well positioned to be a contributor in helping to transform healthcare through regenerative medicine, through our tissue-based products. A little bit about the financial highlights, and I'll turn this segment over to David.
I'm excited our financial results were very compelling, so I get to talk first. Usually I talk at the end of the presentation, but running through the results that were announced this morning, our revenues were up 20% to $29.5 million. That's an all-time high for the group. That growth was driven by both of our key platform technologies. Our BioRinse segment up 25%, and our D-Cell segment up 17%. So broad growth across the portfolio in 2023. We increased, moving down the P&L, our gross margins up about 200 basis points, from 46% to 48% in the period. And, driving sales growth, increasing our gross margins, and, with our ever-present focus on maintaining a lid on our administrative overhead, managing to our budgets, allowed us to report a full-year adjusted EBITDA profit of $925,000. That's the first for the group. Again, and when we discuss adjusted EBITDA, the sole adjustment for that is the non-cash share-based payments that we are required to book against our profit each year. Also importantly, our cash position is strong, and it supports our growth plans for the business. And for the first time again, in the second half of 2023, we increased our cash position. That's the first time, absent the fundraising, that the group has grown the cash position in its history. So very pleased to have the sales growth and turn that into cash generation in the second half of 2023.
So a little bit about our 2023 commercial and operational highlights. Since 2021, we set in place our 4S strategy. The 4S strategy, which was supply, sales revenue, sustainability, and scale. This, and I'll talk about that a little bit more in an upcoming slide, but this has been a highly successful change in the direction for the company. It has and continues to provide the structure and clear direction for everything we do. With respect to supply, we with our expanded phase 1 facility, we're able to not only source more donors, but in 2023, we saw a 28% year-on-year increase in the number of donors we're able to process into product. Now, this additional processing capacity enabled us to take advantage of growth opportunities, and we continue to add products or product improvements to our portfolio to address market demands. And also, by having this additional supply of tissue products, we're able to generate additional revenue by expanding the distribution of our products globally. The establishment of our third-party logistics partner in Ireland will enable us to distribute products into the European Union, the Middle East, as well as Africa. And lastly, the interest in our unique xenograft tissue product, the OrthoPure XT, continues to spread as we added on distribution opportunities in the UK, China, and Australia. And I just have to point out the latter two, China, Australia, do require some additional regulatory approvals. But the interest in this particular product continues to spread globally. Little review of our core products and our technology platforms, and really which of the product families grew the most in 2023. So we divide our human tissue business into two segments: the BioRinse as well as D-Cell.
We need a meeting room in a bit.
We're in a webinar. Excuse me, sorry. We're in a room here in London. I apologize. So BioRinse is the technology platform that came from our San Antonio facility. We utilize it to make our bone as well as amniotic tissue products. Concentrate, our leading bone product is Concentrate, which is a demineralized bone matrix product. We don't produce a lot of traditional allograft tissue products. We produce more highly specialized tissue products. Now, Concentrate, it had one of the highest growth rates in 2023 in our portfolio. This product is distinguished by its ease of use, but more importantly, it is a product that is made from 100% bone, and we verify each batch for osteoinductivity. So that's very important, because when a surgeon uses this product in a bone trauma or trying to do a bone fusion, they want this product to form bone. Birth tissue products, our amniotic membrane, AmnioWorks is also produced under the BioRinse technology platform. This product, AmnioWorks, is noted for its aesthetics and has been used in ophthalmology for things such as dry eye and corneal abrasions. But in 2023, we saw quite a bit of growth of the use of the amniotic membrane in wound care, where you have issues with respect to compromised healing. Now, the D-Cell technology platform, which was the technology platform developed at the University of Leeds, D-Cell is known for its ability to remove 99% of the DNA, and the products in which we utilize D-Cell is DermaPure, which is human allograft dermis. We also utilize D-Cell to make our OrthoPure XT, the xenograft tendon. Now, with respect to DermaPure, because it is such a clean piece of tissue, it's readily accepted by the body and it incorporates rapidly, which is what are some of the things that the surgeons look for when they're using this product in wound care as well as urogynecology. On this slide, this is some of the product highlights. This graph on the left shows our group's growth, and then and the growth you see with each of our businesses. One of the things that you would like to point out, between 2020 and 2023, we saw a compound annual growth rate for the business of plus 20%. In 2020, the top line revenue for the company was 16.5 million. And of course, now we just announced that we're at 29.5 million. As David mentioned earlier, our BioRins platform in 2023 performed quite well, as we saw a 25% year-over-year growth, driven mainly by our demineralized bone matrix products and amniotic membrane. Our existing partners, such as Arthrex, continue to show confidence for this product, and we continue to see how this business will continue to grow and take additional market share. On the D-cell side of our business, this division, the restructuring of our operation and the commercial structure in 2022 continues to show results. This business increased 17% in 2023. This was due in part to the distributors we added in 2022. The D-cell processing technology is also used in the OrthoPure XT product. This is the xenograft tissue tendon used for ligament reconstruction procedures. And in 2023, we saw an increase of shipments, 5 times increase in our shipments of the products. So the interest in this product is growing globally, and we signed a number of new agreements in 2023, which included, of course, the UK, China, and Australia. Again, all these require some additional regulatory approvals. Some of the newer products that we introduced in 2023, which helped to drive adoption and growth. All these products were developed at the request of our, based upon market demand. So the DermaPure Mesh 4x6, some may recall that we introduced the mesh product in 2021, but in 2023, the larger version of this product, which is 7 centimeters by 10 centimeters, saw a 3-digit increase in revenue growth. So we added a smaller version to supplement this growth of this very fast-growing part of our product portfolio. BioRins Sports Medicine Soft Tissue. This was a tissue product where we took our tendons, we changed the processing, we made it more in line with customer expectations. So, as a result, there is more market interest and more market demand for this sports medicine tendon graft. And then V-New-M, we had introduced a pre-shaped dermis product for our urogynecological partner, Arms Medical, a couple of years ago. And this additional configuration of a V-New-M was to create new and additional opportunities for this product. When we look at the market research and the areas in which we participate, this independent market research confirms the growth of regenerative medicine, and as well as in the areas in which we directly participate, whether it's bone graft substitutes, skin substitutes, or soft tissue biologics, which are predominantly focused on the tendons for ligament reconstruction. These markets are all growing and are all multi-billion-dollar opportunities. But I think one thing you note here is the market research shows that each of these areas are growing in the single digits, and our growth in these businesses is growing at double-digit rates. So we believe we are taking market share, and we believe that we'll have greater opportunities to restore the quality of life in numerous surgical specialties as we continue to grow our business. Now, as for the 4 S's, this has been the strategy for our organization: supply, sales, revenue. Having supply drives sales revenue. Having sales revenue will drive profitability, sustainability, and then gives us the opportunity to scale. On the supply side, we continue to focus on more donors, not only for our own product processing needs, but also gives us the opportunity to supply partners with tissue, which may be in excess of what we need for our own processing. In 2024, we have the expansion that we did in the phase one. The processing capacity continues to meet our needs, but in 2025, we will look towards adding on additional processing capacity. Our product demand mix, which of course drives our sales revenue, has shifted to larger volume and higher value products. This has been particularly noted in our BioRinse products. So as we develop additional outlets for our tissue products, this will continue to drive sales revenue. Sustainability. Our profitability improved, and as David mentioned, we control our costs, have tight controls on our spending, but the increases that we've seen in sustainability are partially a result of the demand shifts of our products, moving to these higher volume, higher value products. One of the things that we're able to also do is look at ways in which we can be more efficient. We did not implement a price increase in 2023. We did manage to face the headwinds of increase in materials supply, the cost of materials and supplies and labor through improvements in our efficiency. With respect to scale, with our additional supply, we can look at opportunities to grow our business in new markets, not only new surgical markets, of which there are opportunities, as we currently are focused into certain surgical specialties with our products, but there are other surgical specialties which we've not penetrated utilizing our tissue-based products. But other additional markets also means opportunities to grow our business outside the primary market for us, which is the United States. The third-party logistics partner that we added in Ireland gives us that opportunity to distribute tissue into the EU as well as other markets. One thing I would like to talk about is our growth pillars. So the 4 S's have been the foundation for the organic growth of our organization. It was very important that we made this foundation very stable and sustainable. Now that this foundation is stable, we can now build our growth. And this is how, with these growth pillars. The first growth pillar is we will continue to increase our base business with our current products as well as product line extensions with our existing as well as new customers, as well as our own distribution channels. The demand remains strong for what we have. With respect to tissue partnerships, we have developed enough tissue supply for our needs, but we can also offer any excess inventory where we can add value to the tissue and provide that to other tissue processors. The third growth pillar is market expansion. We will broaden the use of our current products into additional surgical specialties and markets, but we will also broaden into markets outside the United States. Regulatory evolution. This is the fourth pillar. We will use some of our resources to move our business into the medical device space. This gives us a couple of things. One is it gives us the opportunity to look at other products in which we can innovate, as well as have specific claims as to how the product can perform. But it also gives us to markets outside the United States, which regulate human tissue as a device. Now, being a medical device manufacturer may not seem like a big task, but for a tissue processor at our size and maturity, This is not something that many tissue processors have. So at this point, I'm going to let David walk us through the financials for 2023.
Hey, thank you, Danny. As we look at the income statement, we already hit the high points on the financial highlights. I think one important takeaway from the financial performance of the group is that, again, this is the sixth consecutive reporting period of growth going back 3 years, averaging consistently over the last 3 years, 20% growth. So, when Danny and I came on, in the beginning of 2021, we knew the history of Tissue Regenix and that we had to reestablish, the confidence in the equity capital markets with respect to Tissue Regenix and delivering on expectations both of our board and of the market. So, very pleased to show 6 periods of half-on-half growth and averaging 20% over that time period. Again, we've touched on the adjusted EBITDA profit for the year, and very pleased with that. Moving on to the balance sheet, our cash position at year end supports our current business growth plan. We've stated before, and we continue to believe that the funding levels of the business support the need for our phase 2 expansion when that's required, without the need for a dilutive capital raise. Importantly, in addition to the adjusted EBITDA profit for the year, from our June 30 account balances through year end, we actually increased our cash position. That's another first for the group, outside of a period in which they raised capital. So it's nice that we can convert that sales revenue into cash generation. One of the reasons that we were able to do that is the managing our balance sheet, because we do have millions of dollars tied up in our working capital. You can see that our inventory levels actually decreased even in the face of increasing sales. One of the things we comment on in the annual report is that our released donor tissue business through our tissue partnerships, that turns over faster. That is true. It allows us to shorten that sales cycle. Also did very well on our collections. They dropped markedly from the prior year. In January of last year, we revised our funding facility with our lender MidCap. We pushed out the maturity to 2028, and we increased the revolving credit facility from $5 million to $10 million when we need it to support the future growth of the business. Our business plan does not require that capital, but it's nice to have it should we need it. So that's the quick summary on the financials, Danny.
So our 4S strategy, it has been a highly successful change in direction for the company, and this has and will continue to be the structure and provide us the clear direction for everything that we do. And now that we've identified also the growth pillars, those will give you an idea of some of the tactical activities on how we can build or drive our growth from the 4S foundation. 3 years later, after we implemented the 4S strategy, we find ourselves in a unique and privileged position of having products in great market demand and are starting to distribute tissue on a global basis. Our donor as well as processing facilities allow us to fulfill all of our current growth aspirations. We have a team of people around us who are motivated, talented, and driven, and who have a very clear idea of where we are trying to take this business. And our balance sheet that allows us to have autonomy over any future growth opportunities that may present themselves. David and I are extremely excited about the future for Tissue Regenics and extremely proud to be a part of it. So our expectation is that we will continue our trajectory of growth and profitability, which in turn will drive shareholder value. With that, thank you for your attention, and we will now turn the cameras back on and take some questions.
I'll read them.
Okay.
So first question from our friend pre-submitted. Where do you see the real growth coming from in the next 5 years?
I think, certainly when we look at, our business is divided up into division with the BioRinse, D-Cell, the xenograph. So we'll see continued growth of our base business, which has been the demineralized bone matrix products, amniotic membrane products, and dermis products. But you're going to see greater and greater, and it's going to be, and we'll be patient, but we're going to see contributions from our distribution of tissue outside the United States. And then we're also going to see greater revenue contributions also from our xenograft tissue business. And this is all going to happen over the next 5 years.
Next question. The February 9th RNS mentioned the possibility of further agreements with other European countries as a result of the use of the Irish logistics hub. Do you have an update on this with A, potential timelines, B, number of potential countries involved, C, estimated impact this could have on Tissue Regenics income? It is noted at the moment a lot of the income comes from America. Could we expect in time the European operation to reach similar levels if the pipeline of potential agreements is signed?
Wow, that's quite a few questions there.
Yeah.
Let's see, the potential timelines, I can only say that right now we have a number of other agreements that are in discussion, in negotiation. So as those come to fruition, we will certainly make those announcements. One of the things that we look at when we look at opportunities to distribute outside the United States is that we're looking at countries where the barrier to entry with allograft tissue is fairly low. We are not going to look at markets where the regulatory process is particularly burdensome, especially since regulatory approvals currently are taking much longer than they have in the past. So we're looking opportunistically at markets in which we can enter quite quickly. So I can't really tell you which countries they are, but we are currently in negotiations on a number of fronts. What else was in that question? Is there any?
Let's see.
Yeah, can't really comment. We don't provide any forecasts with respect to how much contribution, but certainly we would love for that, for our business outside the United States to grow as quickly as it is in the United States.
Next question. How much spare capacity is there to deliver additional material before further capital is needed for the construction of I think they mean our phase 2 expansion?
I think we've stated in the past that our facility in San Antonio has $40 million of revenue potential. And I'll let David kind of go into more detail what that really means. We are planning on initiating and completing our phase 2 expansion in 2025. And we've said in the past that should give us revenue potential of up to $80 million, if not more. When we completed the phase 1 expansion, we thought it would give us $30 million of revenue potential, but because of once we moved in, we developed all these efficiencies, we've determined that it's given us $40 million of revenue potential. But I'll let David kind of explain that a little bit more in detail.
Yeah, well, just one comment. We talk about the revenue potential at 40 million and disclosed 29.5 million of sales revenue for 2023, which would give you pause with respect to our ability to grow. But be mindful of the fact you need to adjust out of that the sales revenue that doesn't make a call on our processing capacity. So our German joint venture GBMV, that revenue obviously isn't processed through the facility in San Antonio. As well, the released donor tissue business with our tissue partnerships, that sales revenue doesn't have a call on the facility. So we have a substantial amount of capacity before we get closer to needing to add on the phase 2. No, that's fine. Next question. I've read on a number of occasions over the last few years suggestions that when TRX moves into profitability, it will rapidly become a prime takeover target. Should such a situation arise, what actions would the board take in order to adequately protect the interest of minority shareholders and ensure they receive fair value?
Well, I'm certainly not going to predict if we're a prime takeover target. I mean, we're a publicly traded company, so I guess the potential for that happening can happen at any time. And we know that our board is very focused on making sure that if anything of this nature should happen, that it's beneficial to all shareholders. Anything else?
I think that's good. Go ahead. Next question.
Apologize for all these technical difficulties, whether people interrupting us during this webinar or
breaking things down.
Yeah, I don't know what happened to David's camera, but unfortunately, you get to only look at me for now.
They turned it off; it won't turn back on. But you can hear me. Can you tell us more about your M&A plans? In broad terms, how much are you looking to spend? How will you fund it?
With respect to inorganic opportunities, we look at that also opportunistically and whether it could be adding product lines to our product portfolio or even a technology platform, adding on technology platforms to our overall mix. It's hard to describe at this point, whether additional funding would be needed for those type opportunities or whether any funding is needed at all. So, anything else on that one, David?
That sounds good. Many congrats on yet another year of success. Are you able to shed any light on why the share price consistently underplays the success you and your team have had over recent years? Well, that's a good question.
Well, yeah. What we've been told is there's been a little bit of a malaise in the AIM markets, small cap. Unfortunately, I think that's obviously, we continue to do well from the comparisons of how our business has progressed versus others. We do quite well, but unfortunately, our share price doesn't necessarily reflect the same level of success that we're having.
Yeah, and I think when you look at our share price performance relative to some of the broader markets like the AIM share, over the last 12 months, we've been one of the top performing shares, or at least at the higher end of that. Now, that's a market that's not really growing gangbusters, but we have performed well relative to those market indices. In addition, we feel like as we continue to deliver the results that the market expects, there will be in the future a re-rate. It's just the timing of that. we're not market forecasters. We're just trying to run the business, and we're just going to sit here and continue to operate, and eventually that will be recognized by the equity capital markets. Your strategy of funding phase 2 from cash generated from organic growth seems to be progressing well. Why change now to shift to an M&A strategy? I wouldn't say we're changing strategies. I think we have been very, in our discussions about M&A, we would be opportunistic and be looking for opportunities that are accretive in the short term. So we're not looking to, we're not changing our strategy with respect to the timing of the phase 2 or funding that from internal means. To what extent do you think word of mouth contributes to promoting the success of your products? Are you exploring all the avenues for spreading the word?
Our commercial business is quite diverse. As you heard, we have strategic partners who distribute our products as well as our own distribution channels. So with respect to our commercial strategic partners, obviously they adopt certain sales strategies and certain sales techniques. And obviously how we see the growth of the business is from their repeat as well as their orders that increase. On the sides of the business that we do control, where we have regional sales managers who also have distributors, within those opportunities, we do see opportunities where it is clinicians telling other clinicians the experience that they have had with our products. Some of that is generated through marketing collateral that we've developed, case reports. We obviously look at also the opportunity to do to publish articles regarding the use of our products. Just recently, the American College of Foot and Ankle Surgeon, a podiatry meeting, there was a poster presentation of the use of our DermaPure products in a specific form of Achilles tendinopathy, and it was very well received. So we utilize a number of different opportunities to spread the word.
Can you give us a sense of how trading is performing in this new financial year, please? I'll respond. We're not really allowed to make forward-looking comments, but I can encourage everyone who's on the call today or on the presentation. Our broker Cavendish makes their equity research available broadly without any kind of contract, or it's freely available if you register on their website with the username and password, and that has a very good review of our 2023 results, as well as the Cavendish forecast for the out year. So that would be, I'd refer you to Cavendish. In addition, Hardman and Company will be publishing a research report here in the near future. So there's two different sources you can get some market forecast for the business.
I'll ask the next question for you.
Oh, okay.
Could you explain the factors that led to the increase in cash in the second half? And are these factors likely to continue into 2024?
Sure. Obviously, as we continue to grow the sales line and grow our gross margins and maintain our overheads, much of that will flow down to the EBITDA line. When you look at our business, there is a seasonality to some of the working capital and cash outflows. So the second half of the year is typically lighter for us from a working capital outflow perspective than the first half of the year. In the first half of the year, we have to make payments like property taxes, and things like that are heavier and front loaded to the first half of the year relative to the second half. But the work that we have done on managing our inventory levels tightly, managing our collections, we'll always focus on those areas and have for the last 3 years. We'll continue to do that. So that, there is a bit of seasonality from the H1 to the H2. In some of the working capital outflows, but the focus that we've had on driving the 4 S's and the sustainability that results therefrom, we have maintained that and will maintain that going forward. BioRent's revenue growth is very impressive. What do you estimate the total addressable market for BioRent in US dollars to be? Do we know that off the top of the head?
Yeah, I'm not going to know that off the top, but if I just look at the BioRent business, and if we specifically look at, say, the market segment in which we participate, the demineralized bone matrix market, as we know, bone graft substitutes is a couple of $1 billion market. Obviously, in orthopedic, spine, dental, oral maxillofacial surgery, they all use some type of bone grafting substitute. A subsegment of bone grafting substitute is demineralized bone matrix, and currently that represents about a $400 to $500 million marketplace, predominantly in the United States. So obviously, we have a lot of room to grow.
Product price increases planned for 2024? Don't know that we have a comment on that.
Yeah. At today, we are not contemplating a 2024, but that could change during 2024.
One question, if you take the interest costs against the average debt levels through the year, the interest rate has increased considerably from 9.98% to 16.6%. Is this correct, or is there something one-off included in the interest costs? And yes, a very astute question. Yes, we had, as part of the financing facility in MidCap that when we put the new facility in place, there was an exit fee that had to be paid. It was going to be paid whenever that facility matured. Because we matured that facility early, we had to pay, I think it was approximately $248,000 of that exit fee. So that was charged off to interest expense in the period. So that's kind of a one-off. On a more organic basis, the interest rates have been broadly stable in 2023. They've run up a bit, but nowhere near the run up we've seen, prior to 2023. So the interest rates have been broadly stable. Can you comment on the competitor landscape? Do you enjoy a monopoly in any markets?
I don't think we enjoy a monopoly in any markets. How we compete against other products in the marketplace is really it's based upon the performance and the quality of our products. As David mentioned, a company like Arthrex, they work with many tissue processors, not just Tissue REGENIX. They have chosen to work with Tissue REGENIX, and our demineralized bone matrix product, as it's known as AlloSync Pure under their labeling. They've chosen to use that as their premium demineralized bone matrix product because of the product's performance. So that does say something about the quality of our products.
Can you say how much the phase 2 expansion is now likely to cost given continuing inflation? We've estimated that cost of the phase 2 expansion in the range of $3.6 to $3.8 million. We believe that is a conservative estimate at this point. That's all the questions.
Perfect. Daniel, David, thank you very much for answering those questions from investors. And of course, the company can review all the questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Daniel, could I ask you for a few closing comments?
Sure. Thank you all for your attention and for your questions. As David and I have stated, the Forest strategy has been a successful change for direction for the company and will continue to drive us as we move forward. Our growth pillars really do illustrate the areas in which we continue to expand the business. So we look forward to executing on our plans for another, hopefully another successful 2024. Again, thank you all for your attention and for your questions.
Perfect. Daniel, David, thank you once again for updating investors today. Could I please ask investors not to close this session, as you know be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Tissue REGENIX Group PLC, we'd like to thank you for attending today's presentation, and good morning to you all.